I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015, NAREIT's Law, Accounting, and Finance Conference. I'm joined today by Jim Hanks, Senior Partner with Venable from Baltimore, Maryland, where over 80% of all REITs are formed. Jim, thanks so much for joining us today.
Glad to be here, Matt.
Now, there have been a number of REIT CEO changes either announced or completed in the past year. Are you seeing any trends emerging in these types of moves? And how important is a well-defined succession plan in a company's success?
Well, I think that succession planning is becoming more and more important at the boardroom level. I see it as a major item on a continuing basis, as it should be at the board level. And I think there are at least three different components to this. One is short-term versus long-term succession planning, and boards should be doing both. And the second aspect to it that I'm seeing is succession planning should be more than just about the CEO. It should be about all senior managers, because after all, if something happens on either a short-term basis or a long-term basis to the CFO, you want to have a plan to address all important positions like that. And as well, I think more and more boards are thinking about succession planning at the board level, which implicates board composition. What is a well-composed board? Are we drawing from the various levels of expertise and skill sets that we want, whether it's operations, real estate finance, international, things like that. And then also boards are more and more thinking about long-term, how do we want this board to look?
On the transaction front, what level of REIT M&A do you expect the rest of this year?
I think it's going to continue to develop and increase. If interest rates go up, as many people are expecting, at least in the midterm, I think that will have, temporarily at least, a downward pressure on REIT share prices, which may create buying opportunities for people that are interested in making a move on REITs. And also, there's an increasing focus on net asset value, NAV, which, to the extent that continues, creates a fairly easy metric for people to look at in assessing buying opportunities.
Now, there's been an uptick in shareholder activism in the REIT space. What do you think is driving that activity, and what impact might it have?
Well, I think one thing is what we just mentioned, a focus on NAV. I think a lot of the activists are looking at that as a fairly easy metric to assess. Also, in this market, which is still fairly high, the number of opportunities are limited. Real estate has always historically proven to be a good asset. REITs in particular have performed extraordinarily well over long periods of time. And I think there's an increasing appreciation for that. And so that's one reason why I think it's so important for REITs to be well protected in terms of both the statutes that they take advantage of and their charter and bylaw provisions and other techniques as well. Not to prevent a takeover, not to entrench management, but to give the board the time to assess an offer in a calm, rational way without the stockholders being stampeded into accepting a lowball tender offer or voting for somebody's slate in a hostile proxy contest. So I find it very disturbing that there's this increased pressure from some small stockholders to opt out of the Maryland provisions that allow directors to take various actions to protect themselves at the board level. I find that disturbing because these activists are seeking boards to opt out essentially permanently from these Maryland provisions, and that means giving up an important choice. And I don't understand why anyone thinks it's a good idea for a board to give up a choice.
Jim, thank you so much for joining us today.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.